What's up, everybody? Thanks for tuning into the first video on Max Financial's YouTube page. I'm going to talk a little bit about these books back here. The Dummies books that I got to get into during quarantine. Did a little bit of reading, did a lot of educating, and I want to share some of that with you guys because there's a lot of opportunity out here, and I would feel selfish if I did not share any knowledge that I found with the masses, right? So, with that being said, how this is going to go is we're going to have a little intro. We're going to go into a little educational section where I talk about a comprehensive review of the book itself. Then we're going to take a little break, and then we're going to zoom right into how do I trade, what do I do with the stock market, am I a long hold guy, am I an aggressive guy? We'll get there, okay? Just hang on, be patient, and you might learn something. We'll see. Before I get started, I must say all of this is for entertainment purposes only. I am not by any means a financial professional, so take it as you will with a grain of salt, and we'll leave it at that. But if you're ready to get started, let's get into it. So what we're about to go through is what I like to call a comprehensive review over all the material that I have covered while reading Stock Investing for Dummies, the 6th edition by Paul Mladjenovic. While these first few slides will cover the first sections in the first 6 chapters or so, the following videos will cover the remaining content in the videos to come. Any questions, comments, or suggestions, save it for the comment section. Leave something memorable. The comprehensive review is broken up into digestible slides to ensure simplicity. This video will review some of the stock investing essentials, assessing your situation, acknowledging risks, and different approaches to investing, as well as some different avenues that you can invest in. So how do we take stock of our current situation? Well, what it took for me personally was getting all my assets together and kind of consolidating down some of the things that I didn't use. Looking at my wardrobe, looking at my day-to-day activities, what do I do on a day-to-day, what am I not getting use out of, and then just liquidating it down, getting rid of some things. I mean, I had some stuff that I hadn't touched in years. Going through my old closets, finding old cards. I know I popped open a closet and found a entire sleeve booklet. I don't know if some of you guys can relate, but an entire sleeve collector's booklet of Pokemon, Yu-Gi-Oh, and baseball and football cards that I had collected from my childhood that are going for an exorbitant amount right now. So that in and of itself was fueling my investments. So just finding something that isn't your everyday expenses to put into the market can really start to pay dividends after a while. I didn't think when I was a kid, obviously, that any of those cards would, turn value in 10, 15 years, but here we are. So that comes down to knowing your assets and liabilities, consolidating debt if you have any, student loans, getting on some kind of payment plan, and knowing exactly what you have to pay and on exactly what date. So there's not any slip-ups. Maybe you need a little extra money at the end of the month, so leave yourself a cushion. And outside of that cushion, then you can invest. But taking care of the important aspects of your financial independence are pertinent and not to be ignored. If you only have a little to invest, then just invest a little bit. There's stocks out there that are literally a nickel. So don't feel the need to throw all your money into the market, knowing that that penny stock or that nickel stock could have just as much growth as a $100 stock. So it's all mental, and it comes down to a lot of education, which is why I'm going to break a lot of the books that I read down, a lot of the For Dummies books. Stock investing isn't the only one. I also read options and stock charts, and we'll go over that too. But that's for a later day. One big way you can take stock of your situation is by knowing what exactly your money is doing for you. Setting up an expense sheet is just one small step that can give you one giant leap forward when it comes to knowing what your money is capable of doing, or if there's anything there to begin with. From college, I have had this Excel spreadsheet which has outlined gross pay, net pay, expenses, any catalogs or subscription services that I have. Getting all these items organized and in one place helps me better allocate what monies I do have to invest. And it shows me when I don't have any money to invest at all. There are certain times in the month where I'll have multiple subscription services falling on the same week, in which case I won't be investing in the market. The major key for me, or where I saw most of my success, was balancing my intake with my outtake, and then multiplying my intake. Therefore, it outperformed the outtake, giving me that residual income that I could use in the market. When you're looking at the type of investor you want to become, I'm referring to multiple things, right? How do you want to invest? Is it going to be passive or aggressive? Are we going long term? Are we going short term? And what kind of investments do you want to be reflected in your investment portfolio? Are you a cryptocurrency guy? Are you looking for some highly volatile penny stocks? Are you looking for those blue chip, high value, high yield dividend stocks? You have to define your approach to the market before you get into it, or it will take you under like a tide. It's important to know the limits on certain accounts. For instance, for Robinhood, you cannot day trade, or your day trades are limited on your account if you do not hold at least 25K in your account. You're able to do X amount of day trades. I don't know what it was last time I checked. I think it was 5. I typically stay away from day trades. Even all my call options are usually swings, which means I keep them overnight at least. Therefore, avoiding that day trading slip up. But there's other people who are looking to get in and out of stocks within the 24-hour basis. So it's important to know which direction you want to go with that. Now that we've started to save up some money and are ready to get invested, it's time that we define what type of experience we're going to have with the stock market. Am I coming into the stock market ready to be aggressive, ready to tolerate risk? Or do I want to take a more conservative approach, make slow, steady gains, but still see some success? I knew coming in that I was going to be a trader. I liked the aggressive nature of the market, and I knew there was a lot of opportunity out there for somebody who was ready to pay attention to the day-to-day moves of some of the companies that were going to see a lot of growth. Now, with that being said, I also know that there's a lot of companies out there that in the long term could have very high payouts, not only in dividend payments, but also in growth. There's a lot of stocks that, because of what happened with COVID, had a lot of upside. No matter what market you came from, airlines, commercial, real estate, everyone was starting from the bottom. So it was important for me not only to get in on the trading aspect of it, but to understand the investing aspect of it. To know that even though there's a lot of day-to-day action going on, in the big picture, there are some long holds that need attention paid to them. This chart that I pulled from Investing for Dummies outlines what a very short-term, long-term, aggressive and conservative investors can come to expect when searching for certain stocks. Long-term stocks will not meet the same prerequisites as some of those stocks that will be traded on a day-to-day basis. Some stocks are worth holding for 2, 3, 4, 5 years, while some aren't worth holding for more than 2, 3, 4, 5 minutes. Coming to be more acquainted with what type of stocks fluctuate in accordance to their market cap or what sector they're in is important when defining what kind of investor you want to become. Make sure your portfolio is focused and not scattered. There's a difference between having diversification and being all over the place. Have a concentrated idea of what you want from your portfolio, and you're more likely to achieve it. Now, while there is aggressive and not so aggressive investors, or passive if you will, there's also several different avenues to invest in. This isn't just trading stocks anymore. It's now evolved to trading currencies, commodities, trading options, trading futures. Things such as Bitcoin, Ethereum, other markets, all fluctuate in ways that you can, in some way or another, financially benefit from. In my first two videos, however, I will specifically talk about the benefits of stocks and options and how to read and understand those to the best of your ability so that you can take advantage of those positions when they come to fruition. When it comes to understanding something as touchy as price action, it is important to have as many resources to pull information from. That way you can build a general understanding of what is causing the volatility, be it break in the news, be it a new product, be it a competitor coming into the field or going out of the field. All these things will attribute to price action. Some other things that it can attribute to price action, or where you can find news on price action, I should say, are channels such as stocktwits.com, which for me has been amazing. I'm not going to say there are financial professionals on there by any means, although there could be, but it more or less acts as a general network for me to bounce ideas off of people, to find the next big stock, to find what's trending at the time, to find what everybody's looking at. So just to have that kind of as a platform, I think is incredibly valuable, and I see that platform going places. It's basically like the social network for investing. However, I also look at Yahoo Finance, I look at the Wall Street Journal, and Seeking Alpha. I mean, the resources are literally limitless. I go on for days, and it's important that you have a very diverse net of potential resources to gather information from. That way you don't have a closed-minded approach or a closed-minded view over what a potential stock could do. Getting the general temperature or general consensus over everybody's opinion on a stock will lead to the most successful endeavors with them. At least that's how it has helped me in the past. So ETFs and mutual funds. These are two different avenues of investing that share some similarities and that share a lot of differences. We'll talk about ETFs first. First off, ETFs, the acronym stands for Exchange Traded Funds. And basically what you're looking at here are different groups of stocks that are generally grouped together based on sector, although there are some out there that have more diversified multi-asset portfolios. But generally what you're getting with the ETFs are sector-specific investment pools that have been basically cookie cut out for you. So if you don't know a specific stock in a specific sector, or can't hammer down just one, pick up an ETF that has about 3 or 4, sometimes more, of the stocks in a specific sector in it. Therefore, you get a general range of what that sector is doing during that specific time frame. Now, there are ETF screeners that you can go through, be it at etfdb.com, which has varied categories, everything from attributes, the issuer, so it speaks on the financial institution that's going to be behind the ETF, structure, expenses and dividends that you might see from it, any returns and risks that you might see. All of that can be screened out through a simple screening process if you know exactly what you're looking for. All right, and that is a wrap on the first half of Stock Investing for Dummies Comprehensive Review. I hope you guys found some good content in there that you really liked. If there was something that you did like, feel free to point it out in the comments. If there's something you didn't understand, feel free to point that out in the comments too. I'm here to clarify and educate, not confuse. But with that being said, I hope some of that stuff got the wheels turning. I hope that the coals are starting to just get warm, and that fire that is going to be you investing is just coming to a brew. But what we're going to hop into now is what I do with the stock market and what kind of success that I've seen. What am I investing in? What sectors do I favor? And where is my portfolio going? Is it a long hold thing? Is it a aggressive thing? I'm sure if you saw the slides, you know that I'm a trader at heart, but I do have some long holds in there. I have some stuff that I think throughout 2021 is really going to see a lot of success. So we'll start to go over that, and we'll get into what we're going to talk about in the next video, which is the second part of this and some of my options trades. So hang around for that and let me know what you think. So when we're talking about how do I invest, what kind of investor is Max? Well, let me tell you, I have 2 completely different night and day strategies to investing. One to kind of hedge the other, and vice versa. So my first approach was to find something that I was genuinely interested in, but also that could affect people in a positive light. So I had listened to, I don't know, I think Shaquille O'Neal on CSNBC one time said that his investing experience and journey changed tenfold when he started investing in things that were going to change people's lives. So I took that approach with my portfolio in the sense that if I'm going to put money towards something over time, how is it going to build value, or how is its price going to be affected by how or what it puts out? So in short, what I looked at was some things I was interested in, which one of which was comics, Marvel comics at that, and it brought me to Stan Lee, who had recently developed or passed away, but prior to passing away, had recently developed a new animated series that's going to be put out on the Cartoon Channel, which is an educational platform for children. Now, the holding company that has the rights to this cartoon, which is set to drop in the spring, by the way, is called Genius Brands. And while they have been relatively undervalued, in my opinion, in the past 6 to 8 months, this is a stock that I think has a lot of potential. And I mean, the sky's really the limit when you think about it. This is an educational show for children on an educational platform that's already been bought out, and it has a direct link to, let's say Christmas. Let's look at Halloween. Let's look at how kids idolize superheroes to begin with. I mean, the framework of the show and how it's going to come about, it's almost a no-brainer for me. So I went in on Genius hard. The second stock that I'll tell you that I am holding right now is it's actually a drone stock. I am looking at AG Aerial Systems. This is a company that is said to be partnering with Amazon, as Amazon is considering rolling out a drone delivery service. So how's that going to affect people's lives? It's directly related to commerce, right? E-commerce was one of the biggest things that blew up over COVID. So it's important that, I find a way to accurately invest in that, or find a way to kind of make my money work for me, in the sense that I want to take advantage of that. So I'm bought into AG Aerial Systems big. Now these two stocks, just two stocks I'm holding, I have more, but the two stocks I'll let you guys in on are relatively cheap, right? Both under $10, both nearly considered penny stocks, but both with a very bright future. And I'll drop another video where I break down why I'm invested in AG Aerial Systems and in Genius Brands, but just know that those two holdings are going some places. Another part of my investment strategy is proper assessment of when to get out, right? So with the options trading, it's a very time-sensitive process. Generally with options trades, you have a allotted amount of time for your option to reach either a max or a minimum, because you can make calls or puts, calls being an option going higher, puts being an option going lower. For the most part, I do calls, but nonetheless, I'm trying to speak on the fact that you can't stay in these past your target. So when I'm setting up options for myself, for instance, say a stock is $55 on Monday, I think it's going to reach $58 by Friday. If it reaches $58 by Tuesday, there's my target. I'm getting out. And the one reason is because I've learned over time that if you sit there and watch and wait for that ticker to keep going up, or for time to keep elapsing, and if you're familiar with the Greeks, you know this, the stock's value will only deteriorate. Since the stock has an expiration date, there's this thing called a time value. We'll talk about that a little bit more when we get into this one. Okay, Bridget. Options for dummies. This is going to be probably video 4 and 5, depending on when we wrap up that other one, but a lot of technical analysis goes into trading options. So knowing when to cut and run, per se, is fairly important. So just know that taking profits on targets and not over trading are two things that have really helped me out as far as staying away from taking some bigger losses, even though I've taken plenty. Another thing I wanted to touch upon is investing in networks. The stock market of today is not that of what it was when I was in 7th grade when I first got interested, nor is it that of what it was when my parents got invested when they were in their 20s and 30s. The internet has revolutionized what trading has become and its potential for what it can be. Basically, channels like StockTwits, Twitter, Facebook, Reddit, Discord, Patreon pages, organized groups of investors that have like-minded goals are coming together and approaching the market in a way that the world has never seen. Take GameStop, for instance. This was a case of a short sell where we had brokerage firms on Wall Street thinking one thing, we had Stan down the street thinking another thing, and then Stan from down the street says he thinks this stock can go someplace. The same way that if you're at an investment firm, they could say the stock is going to go someplace and you can get behind that. But this guy had a community of investors who not only believed, but had the conviction of belief that this stock could go someplace. What happens? Well, I think we all know what happened with GameStop, but it has not stopped. What has happened with GameStop is being executed on several other stocks on a daily basis on Wall Street. So it's important to utilize that. Get on Wall Street bets. Don't think that just because it's a Reddit page, you can discredit any of the information coming off of there. Because as of last week, I saw on MSNBC, there are businesses on Wall Street that are hiring people to scour Wall Street bets for them. There's value out there on those pages. There's value in those StockTwits pages. Not everybody in there is an idiot. There's value on those tweets that people say. Everybody has opinions, but as a collective whole, you can gain a general consensus over what a stock's value or trajectory can be based off what you find in these channels that never otherwise existed. This is what's revolutionizing trading. The fact that traders are coming together like never before. So take advantage of it. So the upcoming review, what's it going to go over? In short, part one was, what is investing, why invest, what can become of investing. Part two is going to be more of how to invest, strategies, how to approach the market, how to look at things if you want to be safe, if you want to be risky, if you want to be moderate. We'll go over all that in video 2. If you have any questions or you want me to touch upon anything I touched upon in this video, please say it down in the comments. But other than that, thank you for hanging along. It's a 20-minute video, so I appreciate you guys watching. Till next time, peace.